position. Sorry, as I was explaining compounding. Okay. So I said while I was trying to explain compounding, this will be the last session because I have other meetings that would kick off in about 25 minutes from now, and I need to attend them. All right. It's also important as we progress, as we begin to learn, we'll be forming, each of us together will form like a trading community per se, right? We'll share ideas, we'll discuss, right? There's one of my trading community online now. We started to discuss what to expect in the market, right? Okay. Are you still seeing my chart or you are seeing the PDF? Let me know. Okay, my chart. Okay.
I've seen the charts.
All right. Right. So I was trying to explain compound and I said that the account size, so the market is open, right? And what you're seeing now is the market being bearish on a 15 minutes time frame. The price is going down now. That's what you're seeing. Okay. At the end of 15 minutes, we'll know how far. Okay. So probably we might still be here till 15 minutes though. Let's see. So I was explaining compounding and I was saying that the account size is $1,000. The risk to reward ratio is 1:2. The lot size, which is the position size or position sizing, is 0.1. And the person only decided to take 5 trades. And because the net or equivalent profit is $50 for each trade, the person is ready to lose 25 to get 50, which means supposing the person lost in the 5 trades he placed, the person is going to lose in cumulatively $125. Do you understand that? Now, if you subtract $125 from $1,000, what do you think should be remaining? Come on, are you sure I should not place a good sell?
875.
875. So you see, the person still has, let's see, do what he wants to do. So the person still has $875 remaining in that account, right? So you are seeing here that, I mean, the person is still far away from crashing the account, at least reasonably so. Because if the person is risking $25 per trade, which means the person is risking 25 pips per trade to crash a $1,000 account using 0.1 lot, the person has to lose 40 trades consecutively. Do you agree? Yes, you need to agree because how did I get 40? 1,000 divided by 25. The account size is $1,000. And for each trade, the person is ready to risk only $25 using a 0.1 lot size. Remember, if I use a lower lot size, it will be a higher figure. If I use a higher lot size than 0.1, it will be a lower figure, right? So, but because the person is using 0.1 and the person is ready to risk only $25, before the account will crash, he needs to lose 40 trades consecutively. So you see, the person now decides that, okay, probably in a month, it's going to take only 5 trades with the same risks, right? $25 risks, 0.1 lot position, nothing more, nothing less. In short, nothing more, but obviously something less, right? But then with a disciplined kind of mindset, it has to be nothing more, nothing less. Stick with your 0.1, right? And then obviously you need to fine tune your entry and all of that, right? But then suppose your entry was wrong, you could be using something less, but then your less, what you're using, all lot size you're using in the lesser value cumulatively should not be more than 0.1, right? That was what I was trying to explain with my testing the water using 0.01, testing the water using 0.02, and all to now spare for more, right? More movements. Okay. So back to what I was saying. That the person decides to take only 5 trades per month using 0.1 and he wants to risk $25 for $50 per trade. It means based on the compounding technique, the first trade, the person made $50. The next trade, the account balance to trade the next trade will no longer be $1,000, but $1,050. If the person wins the second trade, the account size now will be 1,100. So before you will take the third trade, you will be using 1,100 to trade the third trade. Are you getting it? So that is how compounding works. So by the time the person has placed 5 trades, your total profit will be $1,250, which is what I told us in the table. Now, $250 from $1,000 is how many percent? That should be 25%, if I'm not mistaken. Right? Yes, 25%. So in a month, that person is already making 25%. All right. So most times when you see all these investment people tell you wonderful percentage, it's not as though the thing is not achievable. But most times, once that discipline is not there, right? Once the proper mechanism to ensure that those things are there, that profit is maintained in the long run, it will surely crash. But if you are disciplined and say, okay, only 5 trades throughout the month, and let's say 1 trade per week for the weeks that have 5, for the months that have 5 weeks. Is there any month that have 5 weeks? I don't know. I think it's 4 or 3, right? So wherever the case is.
No, maximum of 4 weeks.
Okay, 4 weeks. Okay. So in 4 weeks now, the person is saying he's going to trade 1 trade per week. Obviously, in one of the weeks, he's going to have 2 trades, right? But then the person is targeting 50 pips, and in a day, you can get 50 pips. In any market, I can assure you that. In any pair, in a day, you can get 50 pips. So imagine someone now saying, in 1 week, he's only going to place 1 trade and he's going to look for only 50 pips. Greed most times will not allow us to do that. Trading psychology most times will not allow us to do that. But a disciplined trader, a trader that has found himself among a community of disciplined traders to help with profitability, can just look for that 50 pips. Probably the 50 pips might not come in 1 day. It might come in 2 days or 3 days, because the person is saying 1 trade per week, right? So let's say 1 trade per week for 4 weeks, right? So you discover that if that person is disciplined enough, at the end of 1 month, using a $1,000, would have made $1,200. That's a 20% increase. So when I come and start telling you investment of ROI 10%, you are likely going to believe me and invest your money, right? So when you see some of all these things crashes, a lot of things are in place. They didn't manage risk, they overtraded, or CBN, right? Because part of the reasons for those of us that tried MBA, right? Part of the reasons MBA crashed was because CBN was on them, right? How can they be giving people 15%, 20% monthly when the bank cannot give you 1% per month? So they needed to frustrate their business, because as much as these guys want to process transactions, they have to use banks, right? So when there's dollar inflow, big money coming in millions, and you're paying people, telling them ROI, CBL will just use big touchlight, focus on your account, freeze your account. Your investors will come and kill you. Use your money and do something else, right? So a disciplined trader having a trading compounding technique and a proper risk management, you see, will become profitable in the long run. So I did all of that to explain trade compounding. You could use various scenarios, right? You could use various scenarios based on the position size, based on the balance, based on the risk to reward ratio, and then your compounding. Now, that is it with compounding. I need to say another thing again, which is another subtopic in risk management, That subtopic has to do with stop loss. Now, remember, to be a profitable trader, you must use a stop loss. I repeat, to be a profitable trader, you must do what? Use a stop loss. The moment you are placing a trade and you're not using a stop loss, count yourself in the first and second category of risk management perspective I explained it in the start of this class, which is maximum loss or maximum profit, maximum loss for minimum profit. The moment you don't put a stop loss, you just told the market, deal with me as you want. But if you put a stop loss and you have measured your stop loss in terms of the pips, in terms of the dollar, because obviously the pips will affect your dollar based on your position size, you have more chances of surviving in the market than losing. But if you place a trade and no stop loss, sorry, you are risking more than you can afford to lose. So stop loss is the third thing I want to add again. And as traders, you must trade with a stop loss, and you must understand that stop loss. You must know how many pips is that stop loss and what the dollar value will be to your account size. Let me emphasize this point because a lot of us might begin now to be interested in trading forex signals. You hear people who are giving you signal services, and then you see them stop loss 1 point, and they did not tell you how many pips. It is dangerous for you to blindly just take a trade like that. So I might be gracious and say stop loss 1 point, this 25 pips. Good. So you now who is trading that signal, you need to now ask, if this stop loss is 25 pips, what kind of lot size should I use based on my account size? If you are using $100 account size and you are using 0.01 lot size and the stop loss is 25 pips, it means what you will lose is $2.5 from your $100. But even if that stop loss is 25 pips and then you now going to use 1.0, use 1.0, your account size is $100. The truth is, to crash the account, you actually need 12.5 pips to crash the account. But then to crash the account, you need $10. So you need 10 pips to crash the account. So the account market does not need to even do 12.5 pips for you. It's just do 10 pips and your account has gone. But then if you are saying, okay, $100, I want to use 0.1, right? And with 25 pips stop loss, it means therefore they are going to lose $25 from your $100, which means if you lose 4 trades consecutively, account is gone. So you see why it is very important that you learn this skill, because in the process of taking a signal from signal providers, or if you decide to share and all of that, you need to understand, in analyzing the risk management, in looking at the stop loss, you also need to understand why are they saying buy. If you open your chart and with your analysis, this is not going to buy, and they're telling you buy, don't buy. Because what do you observe? The 15 minutes candle just closed, another one has opened. If you're looking at your chart very well, the previous 15 minutes candle closed, another one opened. The time right now is 11:15 plus. Like we're really counting seconds, right? So this one now we close by 11:30. Okay. So you see, your stop loss is very important for you if you are going to manage your risks and going to be profitable in the long run. If you don't know what the stop loss is, if you don't know how that stop loss will affect your account size in terms of dollars, and obviously in terms of your lot size, you will not be profitable in the forex market. I can give you $1 million now and say trade. you will crash the account, right? So your risk to reward ratio, your compounding, and your position sizing is very important in managing your risks. I know when I was doing all of those mathematical calculations, it might be difficult for you to understand, right? But if you are taking notes, taking those figures, right, based on the lot sizes, some things, little understanding should be coming to you, right? The more we begin to learn, I'll be expanding more, I'll be repeating those things again. You understand them more, you understand what to do as you trade. All right, so this is where I'm going to be ending the class for today. Let me take questions because I have meetings to attend in a short while. So please, if you have questions, let me hear you. It's funny how I'm not eating today and my food is on my table. So please, questions. Chidera, do you have a question?
Not really, sir.
But Chidera, did you fully understand? If you don't, tell me, like maybe partially, right? Do you fully understand all I've said?
Yes, yes, yes. I understand everything.
All right. Shinwe, how about you? Any question? Chinwe, any question? I hope she has not slept off. Chinwe, any question?
No, sir, I'm good.
Did you fully understand all I've been teaching?
Yes, sir.
Okay. Daniel, Ezekiel, any question?
No, no question. No question.
How about you? Do you fully understand?
I missed at some point, so I'm hoping maybe when I go back to the YouTube channel to
Okay.
go through this thing, I'll be able to understand what I missed.
All right. That's okay, that's fine. So even if you watch them and you still have questions, you can put it up on the Slack channel. For those of us that may meditate and study more and you have questions, still put it up on the Slack channel. Thankfully, I recorded today's session and I'm going to ensure it's uploaded maybe by this week. Everest, any question?
No, sir.
Do you understand?
Very well, sir.
All right. Lastly, Success Chima. Any question? Success Chima, any question? Success Chima, any question? Okay. I hope he has not slept. All right. So that's the end for today. Trust me, people that missed this class, oh my God, it's going to affect their trading. Like, it's going to affect them because if you cannot manage it, sorry, you always see Forex is scam and you see all the bad things about Forex. But if you can understand risk management and you keep to it because you need to become disciplined traders, right? There are times I've flaunted in my own discipline and it has hurt me badly. But the more I keep on reassuring myself, teaching myself to remain disciplined because I know that is the only way I can be profitable. 90% of traders lose money. Only 10% of forex traders makes money. So you have to do what the 10% are doing to remain in the market, right? So risk management is key. I may likely still talk about it again in another class. And then those of us who are here obviously would share our understanding and all of that and to help every other person grab the class. But then I'll do it to upload and then we'll see how we progress from there. All right, so in the absence of any other question, we'll be closing today's class. We'll be signing out by 11:20. We started by 9:30. So thank you very much for your time. Have a good night's rest. God bless you.
You too, sir.
Thank you, too, sir.
Thank you. All right.